I want to talk a little bit about a couple of the names that you have for us here and some of your top holdings. I know you really like Wells Fargo. Talk to me about why. What's the bull case?
So Wells, as you know, has been an underperformer, over the last 7 years because of this asset cap. They've had a number of, headwinds in terms of regulations. But there was a news article a couple of weeks ago that suggested that it may be finally in the final phase of completing the requirements for the asset cap. And with the stock trading at a little under 1.4 times tangible book value for 25, if we were to get that relief, I think that would be very bullish for the stock. And, we talk about getting probably to a 15% ROE, so it's, over $6 of earnings next year. That's predicted for 26, so that would pull forward, and I think people would also appreciate this stock in terms of the path to growth as well. So I think within the big bank sector that's done very well this year, there's hidden value in Wells Fargo, and given that article that we got recently, I suspect that we could get some feedback on the third quarter call about that in a path to getting free of that, and that would be certainly a good catalyst to the company.
And McCray, you also have some regional banks within the top holdings here when you take a look at Charles Schwab for Citizens Bank shares. I'm curious, the health and the stability of the regional banks at this point. What's your assessment?
So we've been pretty picky about that sector. First Citizens, as you know, acquired Silicon Valley at almost double book value through the transaction, managing incredible integration with that, and then some benefits. But they'll face some NII headwinds next year because of their costs with their bank lending facility, et cetera. So we really like that stock. The very entrepreneurial management team, great outlook there. Again, I think the regionals in general will be better positioned, a normalized curve, and as we've seen, the CRE to some extent has stabilized a little bit. Real estate's doing a little bit better, so I think that helps them. They're more sensitive, certainly, to NII than, say, the bigger banks, which have more contribution from other segments as well. So, but I still think you have to be careful. We do have the Basel III requirements at the end of the year as well. So we like some of the regional banks, but we've been focusing on the big banks for a number of the.
I want to end with one more question on the big banks, specifically Bank of America. And I know you've got Berkshire and B of A. Is that an inherently contradictory thought now, or am I
Well, we own Berkshire for a number of reasons, and it's one of the largest participants in the S&P Financial, so we're obviously indexed to it. But Bank of America, obviously, when the biggest shareholder and one of the world's foremost investors is selling, clearly it gives you pause. But I think there are a number of reasons that he may be selling, and in addition to the appreciation that the bank has accumulated over the last couple of years. So I think narrowing of the position and also just where it has come, and managing the overall balance sheet ahead of perhaps a change of management in terms of risk management for the overall portfolio for Berkshire. But again, you have to do your work, and we still see pretty good trends for Bank of America. Great call by Moynihan, a couple of weeks ago in terms of the outlook. So we see them managing well and producing good results.
All right. Well, we got to leave it there, McCray, but really appreciate you joining us in person. Thank you so much. McCray Skies over at Gabelli Funds.